Your income dropped. Now what? Before panic hits, here are the 21 smart money moves that can save your wallet right now, even if everything feels out of control. When money becomes tight, whether because of retirement, changing working hours, or unexpected job loss, the first instinct is often panic. But the truth is, financial stability isn't just about how much you earn. It's about how smartly you manage what you have. In times of reduced income, your priority becomes controlling the outflow, trimming unnecessary spending, and stretching every pound further. And that begins with the first major step, getting absolute clarity on your financial picture. Start budgeting, the foundation of every financial reset. Budgeting is not just writing numbers on paper. It's a financial reality check. If your income drops, you need to immediately understand what your non-negotiables are. Your rent or mortgage, utility bills, council tax, debts, and essential expenses. Once you total these, you can see what remains for food, transport, and miscellaneous costs. Many people avoid budgeting because it feels restrictive, but in truth, it gives you back a sense of control. A well-planned budget prevents overspending, reduces stress, and helps you make intentional decisions instead of emotional ones. Think of budgeting as turning the lights on in a dark room. Suddenly, everything becomes visible: where your money is going, what's draining you without your awareness, and what needs adjusting. Once you track expenses for even 1 month, patterns appear. Intentional decisions instead of emotional ones. Think of budgeting as turning the lights on in a dark room. Suddenly, everything becomes visible: where your money is going, what's draining you without your awareness, and what needs adjusting. Once you track expenses for even 1 month, patterns appear. Unnecessary impulse purchases, expensive convenience buying, or forgotten subscriptions. Which brings us to the next point. Cancel or pause subscriptions, hidden drains on your bank account. Subscriptions are the silent killers of budgets. A gym membership you no longer use, an app you forgot you downloaded, or streaming services that seem cheap individually but cost a fortune collectively. All of these drain your finances every month. Review your bank statements and highlight any recurring charges. Many people discover they're paying for things they haven't used in months. Pause or cancel what isn't essential. You can always resubscribe later if your situation improves, but for now, these small cuts accumulate into substantial savings. Reduce council tax bills. Take advantage of available support. Council tax is often one of the biggest monthly expenses after rent, but many people don't know that reductions are available if your income drops or if you're receiving benefits. Depending on your location and circumstances, you might qualify for up to 100% reduction. If you live alone, you're likely entitled to a 25% single-person discount. Carers, people with disabilities, and specific household situations may also qualify for reductions. Checking your eligibility takes minutes but can save hundreds of pounds yearly. Save money on car insurance. Don't accept renewal quotes blindly. Every year, millions of people overpay on car insurance simply by letting policies renew automatically. Insurers often raise premiums annually, even if you haven't made claims. Instead of accepting this loyalty penalty, compare prices using platforms like Money Supermarket, USwitch, Compare the Market. These sites help you identify deals that fit your budget without sacrificing essential coverage. Switch to own brand products. Small changes, big savings. Branded goods dominate supermarket shelves, but own brand alternatives often offer identical quality at a much lower cost. Research indicates that switching just 7 branded items to supermarket brand versions can save £240 a year. Over a decade, that's nearly £3,000, money that could go towards savings, travel, or simply easing financial pressure. Use apps to reduce food costs. Modern tools for smarter spending. Food expenses are among the hardest to cut, but apps can transform the way you shop. Platforms like Olio let you collect surplus food for free within your local community. Meanwhile, Too Good To Go offers magic bags from restaurants and shops at a fraction of the retail price. These bags often contain perfectly good items that businesses would otherwise throw away. These apps don't just save you money, they help reduce food waste, making your budget-friendly choices environmentally responsible too. Buy frozen, cost-effective, nutritious, and convenient. Frozen fruits and vegetables are often more nutritious than fresh ones because they're frozen at peak ripeness. They last longer, prevent waste, and allow you to use only what you need. For families on a tight budget, frozen foods reduce both costs and meal planning stress. Remortgage, lowering your biggest monthly expense. For homeowners, a mortgage is usually the most significant outgoing cost. If you're on your lender's standard variable rate, switching to a fixed-rate mortgage could save hundreds per month. But consider arrangement fees and contract terms before switching. Sometimes a slightly higher interest rate with lower fees offers better long-term value. Reduce other borrowing costs. Escape high interest rates. Credit card debt grows rapidly when interest rates are high. A 0% balance transfer card gives you time, sometimes over 2 years, to repay your balance without interest. Strategy helps break the cycle of debt, but discipline is crucial. Ensure you can repay before the promotional period ends to avoid new interest charges. Boost your savings returns. Don't let your bank undervalue you. Even in 2026, many savings accounts offer competitive rates. Some easy access accounts reach around 5%, while fixed-rate bonds exceed 4.5%. Check your current bank. If your rate is much lower, switch. With rising living costs, your savings must work harder for you, not sit idle earning pennies. Cut energy bills, small adjustments, meaningful savings. Energy prices fluctuate, but small behavioral changes at home consistently lower costs. Examples include switching to LED bulbs, draft proofing, reducing dishwasher cycles, taking shorter showers. Though each adjustment saves only a few pounds monthly, together they significantly reduce your annual energy outlay. And if switching providers becomes available, comparing tariffs could save even more. Consider a water meter. Only pay for what you use. If you have more bedrooms than occupants, a water meter could lower your water bill dramatically. Many suppliers allow a trial period, letting you revert if it doesn't save money. This simple change puts control back into your hands. Reduce buildings and contents insurance. Shop around like car insurance. Home insurance often rises every year, especially if you allow automatic renewal. Comparing options annually ensures you get the best value without compromising coverage. Protect yourself from rising broadband and phone costs. Many people unknowingly pay inflated broadband prices because they are out of contract. Providers often reserve the best deals for new customers, but you can negotiate if you know the current market rates. Switching or renegotiating could cut your bill significantly. Make your food go further, reduce waste, save money. The UK households collectively throw away over 4.5 million tons of edible food annually, worth around £700 per family. A little planning goes a long way. Organize your pantry, plan meals around what you already own, and repurpose leftovers. Overripe fruit can become smoothies, banana bread, or jam. Soft vegetables can become soup, curry base, or stock. Get discounts. Never pay full price online. Before making purchases, search for discount codes on platforms like Voucher Codes or Groupon. Small discounts, 5%, 10%, 20%, compound over time. Members of Restless also gain access to exclusive brand offers that can stretch your budget further. Keep your mobile phone bills under control. Overspending on mobile data is common. Set spending caps, use Wi-Fi whenever possible, and switch plans if you're out of contract. Comparison tools help you find affordable plans. Default tax without reducing essential features. Earn cashback. Get paid for buying things you already need. Cashback platforms like Quidco and Top Cashback return a percentage of your spending directly to your account. The average user can earn over £300 per year simply by routing regular purchases through these sites. Reduce motoring costs. Smart driving, real savings. Fuel prices fluctuate, but comparing petrol stations can save up to £220 per year. Properly inflated tires, gentle acceleration, and consistent speeds contribute to fuel efficiency, meaning fewer trips to the pump and more money in your pocket. Make do and mend, the art of saving through repair. Instead of immediately replacing broken items, try repairing them. The internet is full of tutorials for mending clothes, fixing electronics, or restoring household items. DIY cleaning. Products like vinegar solutions and bicarbonate of soda are cheaper and healthier than chemical-filled branded cleaners. Learning basic repair skills saves money and empowers you with self-sufficiency. Sell your clutter. Turn unused items into cash. Your home is probably filled with unused items. old electronics, clothing, furniture, or hobby equipment you no longer touch. Online marketplaces make it easy to transform clutter into cash. This not only boosts your income, but declutters your home, creating a clearer and more organized living space. Saving money is not about deprivation. It's about smarter choices, intentional habits, and reclaiming control over your financial life. Each of these 21 strategies might seem small on its own, but together they form a powerful system that protects you when income is low and strengthens you when income grows again. A financial reset isn't the end, it's a fresh start, a chance to eliminate unnecessary spending, rethink priorities, and build habits that will serve you for the rest of your life. One of the most empowering things about taking control of your finances is realizing that even in challenging times, you still have the ability to improve your situation. Money management isn't just about cutting costs, it's about understanding your behavior, creating new habits, and redefining your relationship with spending. When income drops, many people instinctively feel like their world is shrinking. But ironically, this is often the moment when clarity begins to grow. Once you start applying the strategies above, you'll notice a shift. Not only do you save money, but you also become more intentional in every choice you make. For example, planning meals in advance doesn't just reduce waste, it eliminates the stress of daily decision-making and encourages healthier eating. Preparing insurance and broadband deals teaches you to question prices instead of accepting them blindly. Using cashback platforms rewards you for being a strategic shopper rather than an impulsive one. You may also find that fixing things instead of replacing them adds a sense of satisfaction because you're no longer just consuming, you're creating solutions. Selling clutter, too, often sparks a deeper realization. Most of us own far more than we actually use. Turning old possessions into cash isn't just financially rewarding, it's psychologically liberating. As you continue implementing these steps, the savings accumulate quietly in the background. At first, it might feel small, £5 saved here, £20 there, but over months, these add up to hundreds or even thousands. More importantly, these habits build resilience. They prepare you for unexpected expenses, reduce financial anxiety, and give you breathing room to focus on long-term goals, not just survival. The ultimate goal isn't merely to cut costs, but to build a sustainable lifestyle where your money works for you, not against you. Every mindful choice becomes an investment in your future stability, security, and peace of mind.